We're going to work on the 5 tries class exercise. Let's do try 1 together. Here we have no preferred stock. Here we have common stock with a $10 par. 10,000 shares have been issued and 9,000 shares have been outstanding. So the difference between issued and outstanding is issued less shares in treasury. So when we buy back shares from the public, we don't cancel the shares that have been issued, although that's one possibility, but it's typically not done. Typically they're held in treasury, and so the difference between these two is always the share in treasury. So we see 10,000 shares issued, 9,000 outstanding. That means we have 800 shares in treasury. Alright, let's keep going. Here we have total contributed capital of $350, but the question is how much of it belongs in the par account and how much belongs in the paid-in capital in addition to par. Well, the par value is 10, so what goes in here must be $10 per share times the number of shares. So 10 times 10,000. The rest, the amount over par, must go here. We don't know what it is per share, but these two added together equal 350. So this must be the 350 less the amount that's going into par. So we could actually solve for how much we got per share here, because we issued 10,000 shares and we received more than $10 a share. It looks like we received, let's divide this out, $25 above the 10. So we must have gotten $35 a share when we issued those shares, and we must have had to split them, 10 of the 35 here and the rest, the other 25, the amount above 10, in here. And then these two added up gives you total contributed capital. Here they give you the retained earnings, and then we can solve actually for the price per share, can't we? Because we know there's 800 shares by studying the shares issued and the shares outstanding. So the per share would be the 10,000 divided by the 800. So it would be $12.50. So we can fix that. $12.50 per share. What is total shareholders' equity? It's contributed capital plus retained earnings minus treasury. Remember to subtract out treasury. Don't add it in. It may not have brackets on it. You may wish to put brackets on it to remind yourself, but you have to know it's a minus even when you don't see the brackets. Alright, let's try number 2. Once again, we have $350 total contributed. How shall we split it out? Will it be the same as the last try? No, why not? Because the par is 5. So now $5 a share must go here, and the rest goes in the excess of par. So it looks like we still got $35 a share, but now we're splitting 5 here and then 30 here because of the way the par was. Looks like we have 200 shares in treasury, difference between the 10,000 and the 9,800, and there's 15,000 in treasury. So how much is that per share? 15 divided by the 200. So now it looks like the treasury is $75 per share. So now we can get total equity, the total contributed capital plus retained earnings minus treasury. Remember that. And that's the total shareholders' equity for try number 2. So you may want to freeze this and work the rest of them now that we've done 2 together, and then we'll keep going together. So here we are. We got $350 total contributed capital. We have to split that into par and excess of par. For this particular example, we have $1 par. So for each of the 10,000 shares that were issued, we would just multiply it times 1. The remainder would go in here. So everything above par, and we received $350 total when we issued shares, so the rest of it would go in there. Again, the retained earnings is there. Now we have treasury stock of 4,000. And how many shares is it? Looks like it's 600 shares, the difference between issued and outstanding. And if issued and outstanding is the same, that means there's no shares in treasury. But here you can tell because of the dollar amount that there must be some number of shares. And what was the price paid per share? Let's divide that out by the 600. And we have a not very round number there, huh? $6.67. And then we do the math. Contributed capital plus retained earnings minus treasury gives you your total shareholders' equity. All right. Freeze the frame and work it if you haven't had a chance now that we've done some together. And we'll do try number 4. Now this one's a little bit different. What did they do? So now you get the excess above par and not the total. All right, can you solve for the par account? You can, because what goes in here must always be par times shares issued. 10,000 shares issued, the par is 1. So we would put 10,000 in there. 10,000 shares times $1 a share. So now we can get the math. The total contributed capital, 180,000. They give you retained earnings. Treasury, how many shares do we have? 10,000 issued, 9,500 outstanding. So it must be 500 shares in treasury. What is that per share? Take the 12 divided by the 500 and we get $24 per share. All right, and I can pop that in there. And I can complete that doing the math. Contributed plus retained earnings minus treasury. And there's try number 4. Okay, last but not least, try number 5. Okay, so here we know the excess of par, but not the total contributed or the par account, but the par account must be par times issued. So it must be 3 times the number of shares issued, which is 11,000. So now I can calculate the total contributed capital, retained earnings. There's treasury. How many shares in treasury? Looks like 1,000, see? All right, let's put that in there. What was it per share? 20,000 divided by the 1. You probably are way ahead of me knowing it's $20 per share. So you can put that in there. And now it's time to do the math. Contributed capital plus retained earnings minus treasury. And there you go for the last try.